Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 5:28 in the a.m. Eastern Standard Time. Happy Friday the 13th. And what we're going to talk about today is, first off, some headlines off of zerohedge.com. Then we're going to segue into the pre-market activity, and we'll leave off with a member stock chart request. I just have one this morning. Parker Hannifin, symbol PH. We'll go over that chart. It's looking really, really bullish from a weekly and monthly perspective. We'll talk about that in a moment. But first, please click that like button, share with a friend, leave a comment below. I will get back to you. Clicking that like button really helps the channel out. I would like to have a wider audience, and YouTube picks up on the likes and says, okay, people are interested in the commentary, and share it with more people. So please, I really, really appreciate that. So let's begin with a headline that kind of makes me nervous. I always get nervous when I see bullish headlines about gold and silver because that means that the trade is going mainstream. The only thing that is keeping me somewhat calm this morning about it is the fact that we have had a recent sell-off. The froth has come off of these trades, and it was supposed to. But now we are looking to add more to our gold mining trade. Members, I spoke about where we would want to add NUGT on a pullback on Morning Update, which already has been sent out to you this morning. So please go check that out. But the reason why I picked this title out was just to point out this infographic, which is really pretty good. And it shows the debt here of financial corporations in black. And usually they have a lot of debt. But the real story here is more the non-financial corporations, because these folks, what they've done with this debt is that they've bought back their own stock. And it's one of the reasons why the federal government cannot raise interest rates, at least not prior to the 2020 elections. And I'm going to go into another story in a moment of why there's another reason why they cannot raise interest rates. Sticking with this story for a moment before I digress, if they raise rates, then the risk reward of borrowing cheap and buying back their own stock, that story goes away. And the catalyst, which has been sending stocks higher, which are companies buying back their own shares, that gets eliminated. So the question then becomes, who comes in and supports the market? Also in this infographic shows over history the decline of all major currencies relative to gold. And you can see that while the euro, the US dollar are still trading higher than an ounce of gold, other currencies not reflected on this chart, such as the Canadian dollar and the Aussie dollar, they don't show here the fact that gold is at all-time highs. Also, what they do show here is that relative to the pound sterling, gold is at all-time highs. And it just goes back to show you what JP Morgan said. Gold and silver are money. Everything else is credit. Fiat currencies are credit. They're IOUs. They're not worth the money that they're printed on, and they're becoming more and more worthless. Want to know why I'm bullish on gold and silver? Simply check out this link. I'll try to remember to link to it in the description area below. Moving on to yesterday's data, U.S. budget deficit hits $1 trillion with one more month left in the fiscal year. Not since 2011 have we racked up $1 trillion of debt within a year. So at a time where we're being told that this is the greatest economy ever and where we should be paying down our debt, we are actually racking it up. Another reason to be buying gold and silver on this pullback. And I mentioned this earlier, the reason why the federal government cannot raise rates is simply right here. Cumulative receipts, outlays, and surplus deficit throughout fiscal 2019. Well, there is no surplus. It's all deficit. And these are our unfunded mandates. Social Security, $956 billion. Medicare, $626 billion. National defense, you're not defanging the military-industrial complex. Let's consider that an unfunded mandate. And I want to point this one out here. $379 billion on net interest expense paid out on our debt. Folks, this is with rates at near zero. What happens if they ever normalize interest rates? Our net interest would be greater than our national defense outlays. This is why they cannot raise rates. And if they do, with this new socialist system that we live in, this dystopian socialist system in the United States, and more so in the EU, you're going to see this figure here, individual income taxes, spike right through the ceiling. And there's going to come a day where you see U.S. bonds, the bond price, not the yield, but the bonds drop along with the U.S. dollar. And I've been pointing this out to members for quite some time now, especially since we started building positions leveraged towards gold with the gold miners, that once you see the dollar and bond prices drop here in the United States, it's game over. That's a loss of confidence. That means that the dollar's value is dropping like a rock relative to other major currencies, and that nobody else, because bond prices are dropping, nobody else wants to buy our bonds. They are demanding higher interest payments, and that is when the chickens will come home to roost in this country. Moving on to socialism is destroying America. Yes, it is. And I'm not going to get lost in this article, but there's certainly a socialist movement in this country, especially over in the EU. You have Tony Blair, an ex-prime minister, his think tank. They're promoting the end to free speech. And frankly, you have Tommy Robinson. If you don't know who he is, he's an activist journalist who is now sitting in jail over in Great Britain, serving time for the same offense twice. Search his name, Tommy Robinson. Check it out. I believe he's been banned on half the social media as well for speaking his mind. Go to Rebel Media and you'll find more about Tommy Robinson on YouTube. But what is driving socialism is destroying America? What's driving socialism? Folks, it's this. It's the debt. Look at the government debt. They are financing all of this. And as long as individual income taxes don't rise, the American people aren't going to say a god-darn thing. They are afraid in some cases, if they are aware of what's going on. For those not watching Dancing with the Stars and have jobs, they're afraid to speak. So this, in a nutshell, is the reason why we are seeing socialism run rampant. It's the debt on this chart here. It's the reason why they can't raise rates. They have to drop them to keep this illusion of wealth alive. And it's why gold and silver will continue to outperform the markets. Let's get to the pre-market activity. So we were just talking about silver and gold, so I feel it's appropriate to begin here. I spoke earlier in the week of what was a possibility of a head and shoulders setup on silver. And while it's not impossible to break this neckline, it's becoming more and more improbable. And you could see this morning that we are moving higher. We have ever tightening Bollinger Bands. So in all probability, in the next day or so, we are going to reopen our long position in the USLV here. It's not really open for a lot of trading right now. Some institutions may be in there buying. We're up slightly this morning on 300 shares. So let's go back to spot, which is trading more liquid. Okay, so what are we looking for? We're looking for a breakout here on this chart. We've consolidated nicely. I'm going to make the assumption that we're going to open up where we're trading at current, and it appears as though we are poised for a nice morning on silver. Now, taking a look at RSI, we have higher lows and higher highs. No breakout yet this morning. You have a W formation forming here, so RSI is implying higher highs for silver, price action looking strong. But keep in mind that we have oversold conditions with Stokes, which are just beginning to flatten out on gold and silver and the miners. Keep in mind that rallies tend to fade, so I wouldn't get lured into a false sense of security just because the futures are up this morning. Members will talk more about our strategy for rebuilding a position in silver. We were long. We booked profits. Now we're looking to get back long yet again. Gold. Gold is having a good morning. We're up $6.30, just shy of a half percentage point. Now, yesterday, we had a reversal day. We managed to eke out a gain, but this was not a good day yesterday. Despite the fact that we closed up, I am not excited by the price action. Now, I'm encouraged with this morning's action, the fact that we have moved higher off of support. But again, I am cautiously optimistic simply because the shares of gold or the price of gold is moving higher doesn't mean it's going to close there. I want to see where we close. That's what matters. It doesn't matter where we trade intraday. What matters is where we close. So members, more to come on gold. I'll be looking to add to our gold mining position, which is the NUGT. Speaking of the NUGT, we're up on thin trade in the pre-market. RSI is rising. Even as we were falling yesterday into the close, RSI was flashing a bullish divergence. Now, why are gold and silver rallying? What is the catalyst? There's really no headline news out there this morning to drive it. We do have retail sales coming out at 8:30 a.m. Eastern Standard Time. We then have consumer sentiment at 10 a.m. Eastern Standard Time. Those can move the markets, but the reason for the rally in gold and silver this morning is the breakdown, not just this morning, but yesterday of the US dollar. We are breaking down and breaking down hard. And it's not just on a 4-hour chart. Yesterday's daily chart, which I just went over with members on Morning Update, RSI flashed a second breakout point failure in recent days. Not good. We're losing momentum on a daily basis and on a weekly basis, not to mention a 4-hour basis, because inflation yesterday rolled in hot yet again at the core for the CPI, and it's widely expected that the Federal Reserve is going to cut rates, and you have the president jawboning the Federal Reserve for zero interest rates. Who's going to want to buy the dollar? Now, moving on to Bitcoin, and then we'll go to the stock market futures. Bitcoin had a great day yesterday. Now we are consolidating gains, and it appears as though we are going to break out higher. Nice little bull flag setup forming here. So for traders, I think that we're probably going to break out. We'll probably head up here to this upper band of resistance. The question is, do we break out or do we pull back and again retest this lower band of support? I think that we break out. I think that we're seeing higher lows and we'll get higher highs. I'm bullish on Bitcoin. As to the stock market futures, the S&P futures, we appear as though we are going to press higher. Why not? Free money. Companies could still buy back their stocks despite the fact that earnings are weakening. What do earnings matter anymore when you have a central bank that is going to ramp up the printing presses yet again? So we're up about a quarter percentage point in the pre-markets. This could all change with retail sales. We might see some volatility. The NASDAQ up nearly a third of a percentage point this morning. The path of least resistance remains higher for the major averages. If you're shorting this market, you're fighting the trend. Yesterday, I had to close out our Google trade. I shorted Google. It was a small opening position. I never added to it. I didn't average down, which is appropriate not to do. And we had to stop out yesterday. First out, best out. Taking a look at the RSI on the NASDAQ, what's not to like here? We were pulling back yesterday. We had a negative or a bearish divergence. We were pressing higher on price, but declining on RSI. That is now changing. We are beginning to break out on RSI to new higher highs, and I'm assuming that we close higher on this 4-hour bar. So the NASDAQ looking good this morning. But again, I'm going to preface everything by saying, yet again, we have retail sales coming out as well as consumer sentiment. Keep an eye on those numbers. Now, you could argue, and it's a fair argument, that if they come out very weak, then you know that the Federal Reserve is going to cut rates and perhaps aggressively. Taking a look at natural gas, of which we are long using the UGAZ, we are very close to resistance. It was a good day yesterday. We're up this morning marginally. I don't like RSI. So while I like the price action on a daily basis, on a 4-hour basis, I'm not loving it. But it's early in this 4-hour bar. A lot can happen between now and when it closes at 9 a.m. Eastern Standard Time. So we'll remain open-minded and stay long. Now, this morning, the 10-year Treasury bond note, and I mentioned this earlier, get concerned when the price of the bonds drop, U.S. bonds drop, as well as the U.S. dollar. That could ignite a crisis of confidence in the USA. I'm not saying it's happening yet, but it's certainly indicative of an economy which until now, people have been willing to look the other way at our balance sheet. At some point in time, the bond market vigilantes are going to take notice. They're not going to ignore anymore. And that is when things get real fast in this country. Now, I will point out that while we are pressing to new lower lows, we have a bullish divergence on RSI. We were pressing higher, but then we rolled back over. The question becomes, do we now break down to new lower lows, or do we form a W formation and hook back up? That'll cause a rally, or it would imply that we're getting a rally in the bond price. So let's keep an eye on RSI, on the 10-year Treasury note, because while pressing to lower lows, we are seeing a bullish divergence on RSI. And that is it for this morning, folks. Please smash that like button if you would. Share with a friend. Leave a comment below. And let me know if you're interested in a Sunday evening live stream where we can interact. I can take requests for symbol reviews. Everybody have a profitable trading day and enjoy your weekend. Be well.